Government shutdown has been averted for now. It looks like inflation is continuing to decelerate, and there's a very high probability the Fed will leave rates alone in December. Before we begin, remember to like this video and subscribe for more economic updates. I am Devlin Steele, Director of Education at Augusta Precious Metals, here with a look at some stories that made news in the economy this week. Among the biggest developments of the last several days was the passage by Congress of another continuing resolution that prevents government shutdown for now. The new legislation provides funding for some federal agencies until January 19th and others until February 2nd. The measure makes no changes to current funding levels to include providing no wartime assistance to either Israel or Ukraine. Although there remain deep divisions about long-term government funding priorities, lawmakers indicated they wanted to avoid a shutdown during the holiday season. But observers say the stage is now set for an especially contentious spending fight shortly after the new year begins. On Tuesday, the Labor Department had welcome news on price pressures when it revealed the nation's headline inflation measure. The Consumer Price Index increased at a pace of 3.2% in October. Not only is that down significantly from September's 3.7% rate, but it's the slowest annual pace since March 2021. Month-over-month, CPI was unchanged in October, the first time that's happened since July 2022. Core CPI, which excludes volatile food and energy prices, climbed 0.2% in October, matching September's pace. Annual core CPI landed at 4%, 0.1 point below the September rate, and the slowest year-over-year increase since September 2021. The following day, Wednesday, there was additional good news on the inflation front when we learned the Producer Price Index, which measures price pressures at the wholesale level, fell last month by its biggest margin in 3.5 years. According to the Labor Department, PPI declined by 0.5% in October, the largest monthly drop since April 2020. Economists polled by Dow Jones were expecting to find that PPI increased 0.1 point in October. Year-over-year, PPI rose at a pace of 1.3%, down sharply from September's 2.2% rate. As for core PPI, that came in at 2.4% on an annual basis, decelerating from the 2.7% pace set in September. Finally this week, retail sales fell in October as anticipated, but by a smaller margin than had been projected. On Wednesday, the Commerce Department reported that retail sales ticked down 0.1 point last month. Although it's the first monthly decline since March, economists had been expecting a bigger drop. Heading into the week, the consensus forecast was for a decline by nearly 0.5%. Analysts say the drop in retail sales combined with the favorable inflation readings should all but guarantee the Fed keeps rates where they are for now. On that note, CME Group's popular FedWatch tool, which assesses the probabilities of changes to the federal funds rate, now says there's a near 100% chance the Federal Open Market Committee leaves that rate unchanged at their final policy meeting of the year next month. Thanks for watching. Stay connected with us for continuing economic insights. We're taking some time off for the holidays, but we'll be back the following week. I am Devlin Steele for Augusta Precious Metals, signing out.